I love when we do this live and have never met each other and are walking up and going, this is how we roll as entrepreneurs. So that was really great presentations. Thank you guys. I love hearing that. So we're going to talk a little bit on this panel today and hopefully get some wisdom that we can't get on YouTube and share something with the team. So Oliver, and I'm going to read these questions because they were written for me very elegantly. So Oliver, with your rich experience in real estate and as a co-founder of a real estate tokenization, what do you think about the future of real estate and blockchain? And I'm going to extend this question to, what are the hard bits about it?
I think if you look at real estate investing, like what I mentioned in my talk, it's a very illiquid and it's a very chunky, capital-intensive kind of investment. And so what that does is it locks up a lot of your capital for a longer period of time. So, I mean, if you look at the ASX or even the SGX in Singapore, where we launch real estate investment trusts, these are very good retail products that give you fixed income of real estate. But what a lot of retail investors don't see is that actually the private equity real estate space is where people make their money. So you see most of the richest Australians and Singaporeans and even Americans, they make their wealth through real estate investing, right? And that's been the case for the last 50, 60 years. And so what we can learn from that is that in order to make that kind of money, you need to sit at the table with the big boys. And the only way, as a small investor like us, we have to aggregate together through a platform maybe like Fraxter to invest in bigger projects to get the bigger returns for yourselves. Yeah.
I love that. So what is hard about, for you as a founder, and you've raised a lot of money and it obviously is going really well. I'm 18 years in real estate, so I feel institutional real estate, so I feel the pain. What is hard about, like, what are you struggling with and the hard bits about building this business?
So I think initially was the regulations behind blockchain technology. So I failed to mention what's the kind of technology we use. So we use Ethereum-based blockchain on the second layer blockchain, which is called Polygon. What we do is that we issue security tokens. It's very similar to the way that people did the ICOs back in the 2017. You know, they raised a crazy amount of money for really shitty projects. So we thought that, hey, you know, why can't we use the same technology, but use it for good real estate projects? And the way we saw it is that because real estate was so, you know, very chunky, very illiquid. So this is the type of investment that can be disrupted using a blockchain technology.
I love that. So Dan, from your perspective as an investor at Airtree in early stage, how is that sounding? And what do you look for, I guess, in founders and in investments?
Yeah, I feel like I could talk for so long about the latter part, but I mean, one thing that really jumps out to me, and like we kind of consider ourselves to be software investors broadly, and that obviously touches so many different areas. And I know we're here, you know, predominantly to talk about finance, but the big trend over the last 20 years is that finance is becoming softwareized, if for lack of an actual word. And so the thing that jumps out to me is like your ability to kind of capitalize on a market shift and a technology unlock like blockchains. And that's often how we think about these things. Like blockchain kind of comes along to a lot of people probably seemingly out of nowhere, but the way we think about it as investors is this is just another kind of instantiation of software and increase and gives it kind of greater ability for software to kind of touch new industries like something like real estate that is kind of traditionally, as you say, liquid, high barriers to entry and very much in the physical world.
I love that. Yes, because it actually is the access is what I'm hearing, right? So the access then provides that innovation layer that people can flood in. And so that's really, really, really cool. We're seeing that with data as well, which I really like. What you're talking about financially. So other end of the spectrum. So the Australian bond exchange, other end. How do you see the future, I guess, of different asset class bond markets inside of this conversation?
It's actually a similar theme, really, the barriers to entry.
Yeah.
Right? So the global bond market is very hard to access for a mum and dad investor. So usually a similar theme. Technology from a transaction point of view, it's now a lot easier. Well, easier. We can now do a lot more efficient transactions in the over-the-counter bond space than what we could have, say, even 5 years ago. And we've managed to do that. We've been lucky enough to be at the forefront of like the CBDC troves with the RBA and using the new payments platform testing and whatnot. So we can do instantaneous settlement and things like that. So that allows basically the power of investment through to mums and dads, where before it was just sticking with like a PIMCO or a BlackRock, where investors would invest in the fund, would then invest in the bonds. It will give access, similar to like real estate and a whole bunch of other assets, access directly into a market, which was otherwise just prohibitively expensive to get there. So different assets, different market, but the same theme of technologies just knock down the barriers to entry, allows people access to it. With that does come a bit, and what we've done is we've seen that. There's one thing to give people access. The other is to make sure that we give them some form of investor protection, right? So rather than just give them access, we created some effectively listing rules, but admission criteria, so that ours was very credit-based. So we got into AI before it was popular, about 5 to 6 years ago, when we did a collaboration with UC Berkeley in California and Bond University here to create an AI learning algorithm on credit with reactive fixed income. And it was more successful than what we thought. So now we can do an S&P rating in a split second with about a dozen data points. So far beyond our expectations. So not only from a transaction point of view, but also from a support and advice point of view, it can give people comfort and access to a market they otherwise couldn't have got, say, 10 years ago. So we're seeing the same theme, but in a different application of the technology. So it works well.
I love that. I'm hearing the theme. So one of the things we're seeing is this great unbundling of data. And so instead of, data sets, you can get actually down to the field level, and then you can spin up your personalized investment models. Same thing a hardcore hedge fund would have for their businesses, right? You can have down to your family financials or your B2B investment models, which is really exciting because it's access and it's customization. And then it comes the heavy lift of orchestration of actually having it work, which is, always a bit hard, which is why we have CTOs and we love them. So it's cool, like all this access and fairness. Like, what do you see? Let's see, who should we go to? What do you see? Because we're talking both, you're talking about retail investors in the end, but sophisticated, or are you also B2B investors that are on your platforms?
Yeah, so we're both.
You're both, okay.
We delve in the institutional space as well. So I'm a career investment banker, and so is a lot of my team. So we do have quite a solid foundation in that space as well. And that's also to ensure that even the retail client can get the wholesale price.
Yes.
Right. So it's effectively like buying at the airport your US dollars as you go overseas, but at the spot price. So it's to give that fairness as well. So we made sure we could do that, and we've actually become quite dominant in the wholesale market as well. As a byproduct of us wanting to do that. But so that's also a factor as well, to make sure that the price transparency is there. And access is there as well. So information symmetry, we call it. So everyone has the same information at the same time and access to the product at the same time as well.
That makes sense. Are you seeing this when you're talking from Airtree, Dan? Are you seeing this sort of theme of access and kind of the blending of B2B, B2C, fairness, revolution coming through the startups?
Yeah, definitely. I think it actually kind of comes through in a bunch of different ways. But I mean, a big theme of maybe the last 5 or so years has been what people in our space refer to as the consumerization of enterprise software. I think people have gotten used to using software that is great, like has very friendly user interfaces, it works as intended, and they're starting to demand that in every aspect of software, whether it's inside the enterprise or outside. And I think that creates a ton of opportunities for software to, again, kind of permeate and reach different areas, whether it's kind of tackling, small businesses, and like typically your buyers there, they just want something to work. They just have a problem and they need to fix it. They don't have the time to kind of go through month-long learning cycles to get up to speed on a big, hairy piece of enterprise software. So I think that is like definitely a broad theme that we're seeing.
And have you applied any of this to venture investment? How you look, say, either search for portfolio companies or evaluate portfolio companies?
Yeah, I mean, we definitely try to at least stay on top of like what these kind of tech paradigm shifts are. I mean, a good example, Brad touched on kind of AI and doing it before it was cool. I think we kind of probably came to the party a bit later, but we're certainly looking for any way that we can leverage things like that to like make us better at our jobs and more efficient, but also B, like there's nothing like actually kind of getting your hands dirty and doing these things to learn about it. So yeah, we're constantly playing around with how we can integrate AI into, it's not yet making investment decisions for us, thankfully, but working out ways we can use it to create summarizations and brief the team more efficiently and things like that. So yeah, we're absolutely always trying to kind of find how we can leverage whatever's new.
So do you have, and this is the secret question, do you have lists of variables and attributes that you're waiting on your algorithms to find them?
Not yet. We've toyed with ideas, like a little bit of a kind of peek behind the curtain. Like when we write our investment papers internally, we have sort of a broad criteria that is certainly not the be all and end all of an investment decision, but we try to kind of, more for accountability than anything, kind of give ratings, letter gradings against kind of, I won't give them all away to kind of give the secret sauce, but things like team and product market fit and traction and things like that, and a letter grading along with an explanation. So we've toyed with ideas of like, hey, we have a pretty good sample set of data now. We have over 100 portfolio companies and plenty more that we've seen and haven't invested in. So maybe somewhere down the track we can start to think about how we have VC, GPT or something helping us on investment decisions.
Yeah, it's starting, right? Because any opaque industry, which venture capital is one, just like real estate, it's definitely starting to come. So in real estate, one of the jokes we always make is, and I think it was Matt from Black Nova was telling us, overlooked industries where people silently print money. And I loved that. I was like, actually, that's a really good point. So as real estate tips and becomes more and more digitized and innovation floods in, as I drop everything, what do you see for the future of kind of real estate and technology?
So I think firstly, our Frexer platform we use is a B2B as well as a B2C type of a concept. So B2B in terms of helping fund managers and real estate developers raise capital for some of their projects. So in that essence, we're trying to disrupt that funding model as well. And on the other side, the B2C side is face-to-face with investors. We allow investors to come in to invest in projects that they like. And in a way, we sort of bridge that gap to basically people looking for money and people with the money. Yeah, trying to bridge that.
That makes sense. So if you extend it out and you imagine you have everyone on there,
yeah,
right, and everyone's buying and selling and it's liquid and we're all making tons of money, then what?
Then I think you get a more efficient marketplace for real estate in terms of price discovery, in terms of valuations, then you get a better sense of it. Because if you're looking at a $2 billion building in Sydney, for example, I don't know whether any of the buildings here are $2 billion. But if you have a $2 billion asset in Sydney, how many people has the ability to buy that asset? And because of that, because of the amount of demand for that is low, you don't get the best price possible for your asset, for instance. Yeah.
Yeah, that makes sense. What about you, Brad? What do you see if you extrapolate forward, like 5 years?
5 years' time.
20 years' time. Pick a time frame.
Pick a time. Well, AI will have some unintended consequences with regards to B2B. So say a financial planner has information he otherwise wouldn't have right now. Got a couple comes in, gives some advice, but statistically the algorithm says, well, I'm going to use one as an example. The wife's going to cheat on the husband statistically in 3.5 months, given her current spending behavior and her social media patterns. Do you say something or not?
Yeah.
Do I adjust the portfolio accordingly or not? Now, if he doesn't, can he be sued?
Is he liable? Exactly.
If he does say something, he's going to lose the client, but will he be sued because will that be the reason for the divorce or not? So there's a whole array of predictive behaviors we can see already from a bond point of view and a company point of view. So we can even see through, not that we do it, but we have the technology and there is technology available. You can look at a production line, look at the social media behavior and spending patterns of the staff. You'll know if there's going to be an accident by 4:00 this afternoon. You can look at the cameras and through having looked using AI at whether they're tired or whatnot.
Yeah.
Tell them to go home early,
Yes.
and you'll reduce the accidents, right? So there's a whole array of things that consequences of just having. They call it artificial intelligence, but it's just massive amounts of information that we would filter out. Like right now, you can hear the air conditioning. A computer program would go, okay, well, no one else was hearing the air conditioning because I listened to me speak, but a computer would hear both and go, okay, I can adjust the air conditioning temperature because that's going too high or whatnot, where others wouldn't even think of it. So it's like that. It's not really artificial. It's just taking massive amounts of information and truncating into decisions. But back to my earlier point, we're going to be forced to deal with ramifications of being able to predict things we otherwise would be happily naive when dealing with personal issues that will come to the fore.
So what does that do to the risk matrices?
Actually, if anything, it just improves particularly for credit when you're talking, and this is what we worked out when we did our analysis, it just makes it more accurate. So good lenders will get rewarded. Where before there'd be a risk premium on all loans where some, say it's at 10%, I'm just using that, some should have been 9 and some should have been 11. Well, the more accurate you get, some will be 9 and some will be 11. So you'll just get more and more accurate and more refined so that the risk premium over the ones, over that group will just get more and more. It's like high definition TV versus 1970s box, right? You just get more and more refined with regards to your models.
Yes, and when wielded for good, right, you can really improve things for everyone.
Actually, to that point, SMEs, you've got a couple that's in the suburbs working in a company that's set up, and you can actually help them become better credits. You learn from others' mistakes. You're down the path of this, and you're pulling money out of the ATM over here. And we know that people who do that for 6 months, they go and do this next, and you shouldn't do that. So how about you guide back this way and work as a couple? And so there's a whole bunch of things that you can be an active lender rather than just a passive one. And then when they go broke, you take your assets. You can actually help them make better business decisions at a more refined level.
Yes.
So the information's there. It's just I suppose, interest in lenders to do that if they wanted to. So get more involved once the loan is made. So.
Yeah. Well, that makes sense. Absolutely makes sense.
Yeah.
So what about venture investment? If you extrapolate it out, and we say we go into a world of perfect information, right? Just let's do a thought experiment. Perfect information is now about the humans, not over the top technology. What happens?
I honestly, I can't even imagine a world of perfect information in our space, because I think that's one of the really great things about, and one of the things that I enjoy most about my role is we get to prognosticate on the future and kind of have views of where things go, but ultimately, at the end of the day, we get smart founders who know way more about this stuff than us come walk through our door and tell us what the future is going to be. So I'm so far from having perfect information myself that it's kind of hard to imagine. But I think extrapolate from here, it looks very much the same. It's those smart founders who see something we don't and the rest of the world don't, who experience a pain problem or they see a shift in the market, something that unlocks a new paradigm. Like one example in the fintech space, we invested in a company called Zepto, who are building APIs to the new payments platform to enable real-time account-to-account payments. That is something that maybe a few of us at Airtree had read some articles about, didn't really know about until they kind of walked in the door and told us what they were doing and how big it could be. So I think there's just going to be more of that, which is the exciting part. There's just going to be more things to keep building on top of.
I love that, because it's kind of, I think about it like hunting for a glitch when you can see all the information and you start in real estate. It's great. We start, I'm investment banking when I first started in real estate, but we used to literally, I'm dropping everything. We used to literally trade pieces of information, kind of like snippets of gossip. And then it's starting to digitize and alternate data come in, and you start to be able to see it. And the comp sets used to just be what we picked the comp sets were. And now we're watching all 50,000 assets just in Sydney, all automatically, all the time with triggers and predictive analysis. And you look at it and you think, now I can actually start to see the glitches. And that's where the diversity in the room comes in, because we're all going to see different glitches when we look at that. Your founders, they're going to see different things than we would because of the background and the mastery and the expertise they have. And so I guess a good question is, are you noticing kind of the ability to bring diverse rooms in now? Like I'm seeing it's highlighting the value. I don't want to ask the leading question, but it's kind of like now you actually need the diverse perspectives to see the glitches. Are you guys seeing that?
Yeah.
Just agree with me, not really.
No, I definitely, I do agree. And I think it's like, as you say, maybe as the information becomes like trends towards perfection, it really is that like either the diverse perspectives or the combination of perspectives that kind of unlock the differentiation in like, maybe we all start to recognize the problem or the opportunity, but it's the melding of those two things together that's the hard part.
Yeah, because it's like those insight jumps that you can get that then the unicorns are created off the back of, right? Are you guys seeing that as information, as you get more information in your teams?
So I think for real estate, what makes it a good investment product for some is imperfection rather than perfection, right? Because if in a perfect market with perfect information, you're not going to get the best deal in the market, or you're not going to get the best kind of opportunity, because everybody with the same amount of capital see the same thing. So the beauty of real estate is actually in the imperfection of information and imperfection of the market. That's why some people can execute good deals and why some people just can't, right? Yeah.
Yeah, I agree with that. That's people who make alpha see something others don't, or add value where others can't, right? So like good venture capital firms actually help them and say, oh yeah, do you think of this or maybe that, or a bit of corporate governance, and because there's a lot of inventors out there who don't know how to go to market and things like that. I've done a startup, so yeah, been there. But I was lucky enough to have business experience beforehand, where if I would have done it in my 20s, it would have been a different outcome, I'm sure. So yeah, there is a bit of that. But yeah, you'll never get perfect information, but even then, it's what you do with the information and how you see it. So with the same data set, you'll come up with a different conclusion and see different insights that others don't see, just given your background experience and your own lens that you look at the world. So there's always a different opinion. Otherwise, you wouldn't have a market. You wouldn't find a buyer and seller if everyone agreed. So, by definition,
that's good.
I was going to say it's funny. Like as you're talking about venture capital, one of the interesting like differences, say, between real estate and VC is that the asset that we're investing in also has to pick us. So I think there's probably a perfect information kind of thing on the other side, and it's why we always kind of strive to hopefully like add value and do things where we can, so that we can get in front of the right founders at the right time, and they also choose us to partner with.
That's actually a good point. We have some algorithms for the founders in the room to evaluate the VCs against the criteria. But yeah, it's a really good point. The matchmaking algorithms versus, although in real estate, they have to let you in the current world and not on your platform, but in the current world, they have to actually let you buy it. So that makes sense. Now we've got about 7 minutes left. Do we have any questions in the audience? Yes.
With your platform, what confidence does the buyer have that they are buying at a good price? For example, I know nothing about the Japanese real estate market. I see something on your platform and an opportunity and a proposed yield on that. How do I know I'm buying a good price and I'm not just being the dumb buyer?
Sure. So one of the key principles that we have is that for every project that comes onto the Frexter platform, we will do the due diligence on the project. And one of our key principles is this: if we are not willing to put our own money into that project, we will not offer it to our investors. So it's simple as that. And a lot of times when we put something on the platform, we show you who the developer is, who the fund manager is. They already may have a track record outside that you can check up. If you do not trust them, if you do not believe in the project, but you're a bit skeptical, we allow you to invest a little bit of money, $20,000, $25,000, rather than throwing in $500,000, $1 million right at the start. So it allows you to try out certain investment products by some of these fund managers or some of these developers, and then you can see how it goes. But most of the time, most of the developers we work with, most of the fund managers we work with are more reputable. So they have been in the market, they have performed. That's why we're showcasing this to the investor. Yeah, hope that answers your question.
What do you think is the best way to build two-sided marketplaces? And it sounds like you've got two people there who've built successful ones already.
Like I was like totally blindly like going, I have no idea this voice from the light. I'm like, am I dying? Anyway, keep it.
I can start on that. It's kind of, it doesn't matter what the product is. It's making sure that you do provide access to everyone and information symmetry, and also having the right, to Oliver's point, having the right amount of information so people can make an informed decision on both sides, right? And some people may have favorite developers and not favorite developers. The same like some people like certain companies and don't like certain companies or industries and they avoid them. But with a market, there'll be reasons outside of just that particular thing. Like someone might want to buy a BHP bond and someone may sell it because they've got some other opportunity outside of bonds or outside of this market in general that they think they can get a better return on for the risk, or it might be completely irrational and they're doing something strange. I've had a client who sold $5 million worth of bonds, which were government bonds because he needed something really safe because he was at a horse auction and wanted to buy a stallion. So, I have given up trying to understand a lot of my clients' investment decisions. I just deal with my bit and I will let them worry about their larger portfolio allocation. So there'll be decisions made which won't include just the market itself that will come up with the buyer and seller. You get as many people to at least have access to the market as you possibly can, which will give a broader approach for everyone, right? So access for all is your answer.
My question's to Oliver. Fractal, it strikes me from today's presentation that it seems like a variation of what we call in Australia the REIT, which is the Real Estate Investment Trust. Now, that is backed, as you're probably aware, by the ASX, and they have their appropriate diligence and reporting requirements. So if I wanted to buy some property, maybe not Japan, Bangkok or Singapore, but certainly having a lot of options as a small investor here in Australia, and the market cap of the REIT in Australia has got to be a couple of billion, what's the advantage over yours, given I don't know who you are, and the REIT is backed by the ASX that has, in my view, a similar reputation to the RBA. It's highly credible. So why would I go with yours? First point. Secondly, most of those assets are in Australia, so I understand Australia, even though maybe Brisbane and I don't know so well. And it's a very open market, so I can see on when the market's open from 10 till 4, things are changing. I've just been looking at today. Thirdly, these tokens that I don't feel comfortable with, I don't understand them. It strikes you some wanky thing that some young person would be doing, and I'm over 30.
Okay, you have 2 minutes and 30 seconds.
Wow, there's a lot of questions in one. There's a lot of questions. So maybe in my presentation, I brought up REIT REITs. So like what I mentioned in the presentation, REITs are very good products for retail investors. But REITs are not a product that created billionaires or millionaires, multimillionaires. So the space, the exact real estate space that we are in is actually more of the private equity or the private debt space rather than the retail space. Guess what? In school, so what I went to NUS. I did a real estate master's there. So the first thing that the professor tells you is that, okay, so what happens? How do you exit the fund, your private equity fund? You dump it to the REIT. So that's exactly what they say, and that's in practice what every private equity fund does. They have to find another sucker to buy it, right? And that sucker happens to be either another buyer or it could be a REIT. And these are being offered to retail investors. Don't get me wrong, these are very well-managed investment products, but to me, they are more for retail fixed income type of investors. The space that I'm trying to share with you is more of the private equity, private debt space, which a lot of investors do not really get access to. And you're right, there's not a lot of regulation. I mean, it's not a very regulated space. And that's because it's only offered to, say, wholesale investors. But it allows the managers and developers gain access to capital a lot quicker compared to if you form your own REIT, form your own fund just to do the same thing. So it's a different product altogether. I mean, if you feel more comfortable investing in an ASX REIT, yeah, that's a very nice, very good income generating product. But don't forget, it actually gets marked to market, so your net worth goes up and down along the way. Whereas if you invest in a private fund, you don't really see the returns until the end. So you don't really get the volatility in your own investment. And not only that, private funds, you can invest in a little bit more risky assets, but more risky assets will also give you a higher return. So that's something that you compensate for. So to make basically to rest your mind, go through a regulated entity. So a regulated entity will have some safeguards, but it's offered to wholesale investors. So in your mind, you must know it's a little bit more risky. In the token space is something that is new. It is no different from a unit in a trust, for instance. So if you have invested in a unit trust before, what do you get? You probably get a piece of paper. You probably have a trustee somewhere with a trust register to show you who exactly owns the units in that trust. So using blockchain technology is a very similar concept. So blockchain is actually using a decentralized ledger system. So it's still a ledger, it's still a list of investors, but it's public, so everybody can see it, but they will not know who the investor is because everything is hashed. So that is another level. So the trustee will recognize that as who owns a unit in that particular trust. Yeah. So is there another question? That's about it. I think we ran out of time.
Yeah, we're out of time, and I know the room probably could ask us questions all day. Are you guys staying around for a little bit, or are you? Yes, so bombard them as soon as we walk out of here. Thank you guys so much for this great conversation, and I'm sure people can reach out to you otherwise as well on LinkedIn and Twitter X and other things. So thank you guys so much, and join me in applauding.